All right, if you're in crypto, I'm willing to bet there's one question that has been absolutely driving you crazy lately.
Yeah, it's the big one, isn't it? I mean, we're in what feels like a total risk-on environment. Money's flowing, investor appetite seems pretty healthy, but while everything else is just taking off, Bitcoin is just, well, it's just sitting there.
And look, this slide just lays it out perfectly. The S&P 500, the Nasdaq, hey, even gold, they're all pushing higher. But Bitcoin, nope. It's just stuck in this sideways, grinding, kind of painful consolidation. And let's be honest, the frustration out there is totally real, and I get it. It's completely understandable.
You can just feel the sentiment, right? It's brutal. Because look, by all accounts, the fundamentals are supposed to be strong. We've got the ETFs, they're a huge success. Institutional adoption is finally picking up steam. The halving came and went right on schedule. I mean, everything that was supposed to matter happened. And still, the price is just treading water. So, okay, that brings us to the real heart of the issue here. Bitcoin's just confusing standstill. The cognitive dissonance is so thick you can cut it with a knife. And it's making a lot of people start to wonder, hey, is this thing fundamentally broken?
But what if that's the wrong question entirely? What if everyone is looking at this the wrong way? What if this sideways grind isn't a sign of weakness, but actually a sign of something much, much bigger happening just beneath the surface? And that brings us to the central idea for this whole explainer, which is based on some really sharp analysis from Jordi Visser. The thesis is this: Bitcoin is going through a silent IPO. Think of it as this quiet, very methodical transition of ownership, one that looks a heck of a lot like what happens when a huge company finally goes public.
Okay, so what even is an IPO distribution? Well, in the world of traditional finance, it's basically graduation day. It's when the first believers, the founders, the early VCs, they finally get to cash out. They sell their massive, concentrated stocks of shares to the general public. And here's the key: it's not a sign of failure. It is the ultimate sign of success. It means the company is finally all grown up. And this is where it gets really cool. Check this out. The analogy fits perfectly. For Bitcoin, the early investors were the OG whales, the cypherpunks. The big public listing event, that wasn't ringing a bell on Wall Street. It was the arrival of all this new liquidity through the spot ETFs. And the new shareholders, well, that's us, the ETF buyers, the big institutions, the corporations. It's the exact same economic force at play, just in a totally new kind of package.
Okay, I know what you're thinking. It's a really compelling theory, for sure. But is there any actual evidence to back it up? Well, let's dig in and follow the data, because believe me, it paints a very clear picture. We're going to look at 3 key clues that have been hiding in plain sight. First, this really strange divergence from the stock market. Second, a truly jaw-dropping sale from one single whale. And third, what the on-chain data is screaming at us about who is selling, and maybe more importantly, why they're selling. All right, clue number 1, the Nasdaq. For years, Bitcoin basically moved in lockstep with high-growth tech stocks. It was like a high-beta tech stock. But now, that correlation is just gone. It's completely broken. And you know what? In traditional markets, this is classic IPO distribution behavior. And here's why. You have this massive seller, the early investor, who doesn't really care about the day-to-day price. They're just methodically selling. And that selling pressure creates this artificial ceiling on the price, no matter how bullish the rest of the market is. Then you have this. This number is just staggering. On a recent earnings call, Galaxy Digital let it slip that they had sold $9 billion worth of Bitcoin for one single client. I mean, just let that sink in for a second. This is not some scared retail investor panic selling. No way. This is an original gangster methodically and patiently cashing in on a massive, life-changing win. And this right here brings us to the most important point of all: motivation. Think about past bear markets. They were all driven by fear, right? The fear that Bitcoin was a scam, that it was going to zero. But today's market, it's a totally different animal. The on-chain data, which lets us see how old the coins being sold are, shows us that the sellers are long-term holders. These are coins that haven't moved in years. So this isn't selling driven by fear, folks. This is selling driven by victory laps. It's pure profit-taking. So when you put all these clues together, it points to this incredible story unfolding just behind the price chart. We're talking about a fundamental changing of the guard. What we're witnessing right now is a historic transfer of ownership from Bitcoin's earliest, most ideological believers to the world's biggest financial institutions.
And man, this quote from the source material just hits the nail on the head. The sellers aren't selling because they've lost faith. They're selling because they've won. Just think about that for a second. Imagine you were mining Bitcoin back in 2010. You held on through years of people calling you crazy, through insane volatility. You believed when literally no one else did. You won. And now, for the very first time, thanks to these ETFs, there is finally enough money, enough liquidity in the market for you to actually cash in on that win.
So this is it. This is the great transfer. The torch is literally being passed. It's going from the visionaries, the cypherpunks, the idealists, who held a very concentrated supply, and it's going to the institutions. We're talking about players like BlackRock. They don't care about the ideology, right? They care about risk-adjusted returns for their clients. It's a fundamental shift from a belief system to a financial asset.
So let's visualize this. In the past, Bitcoin's ownership looked a lot like this chart right here. It was super concentrated. You had just a handful of OG whales holding these massive chunks of the total supply. Now, that kind of concentration makes the market incredibly fragile, right? One decision by one of those holders could send shockwaves through the entire system. But the future state, the one this silent IPO is building for us, it looks like this. Totally different. Ownership is becoming fragmented, distributed across millions of different investors, institutions, ETFs, corporations, you name it. Now, each one of those players only holds a tiny little piece of the pie.
So why does this matter so much? It's simple. Concentration is fragile, but distribution, that's anti-fragile. Having a more distributed holder base makes Bitcoin way more resilient, more stable, and way less likely to get tossed around by the whims of a few big players. Seriously, every single coin that moves from one of those big, concentrated whales into the hands of thousands of different ETF holders actually makes the entire network stronger.
Okay, so let's bring it all home. What does all of this mean for Bitcoin's next big chapter? Because if this silent IPO theory is right, it has some pretty huge implications for what we should all be expecting from here on out. All right, so if this whole thesis holds true, what can we expect to see? Well, in the very near term, probably more of this frustrating sideways consolidation as the last of this big distribution plays out. But then, as ownership continues to spread out, we should start to see volatility really calm down. Those insane 80% drawdowns, they might actually become a thing of the past. And once that phase is over, the path is finally cleared for the real wave of institutional adoption to kick in. But this time, it'll be on a much more stable foundation. So here's the big takeaway from all this. What we're seeing in the market right now isn't signaling the end of Bitcoin. Not at all. It's signaling the end of the beginning. It's the end of that first chapter, the wild, super speculative, crazy volatile era. This is just the necessary and, sometimes painful transition from a niche cypherpunk experiment into a mature global asset. And I think this final quote just says it all perfectly. Bitcoin's volatility was the price of its birth. Its stability will be the proof of its adulthood. All those crazy price swings, that was just the cost of admission for creating something brand new, completely out of thin air. And the stability that's starting to emerge now, well, that's the proof that it's finally grown up. And that really leaves us with one last fascinating question to chew on. As Bitcoin continues to shed its speculative skin and matures into this more stable, institutionally held asset, what new role is it going to play? Not just in our portfolios, but in the global economy itself. Now that is the real story to watch going forward.